Hello, everybody, and welcome to the Onchain Media podcast. Rachel Onchain here, and I'm very excited today to dive into an awesome DeFi project. I'm very excited to dive all into Peapods Finance today. So we kind of got like a Peapods podcast happening. Very excited, got the Peapods green in the background and ready to go. Del, how are you doing today, man?
Hey, hello everybody, GM. I'm doing very well. I'm happy to be on with Rachel. Honestly, you've been trailblazing within the social media space for Base, and I'm happy to see how far you've grown in just the year that we've known each other.
Thank you. Yeah, it's like it feels like a lot longer than a year. Actually,
Right.
it might be. It might be. I feel like I first learned about peas in like maybe 2023, I want to say. Yeah, maybe that's why. But yeah, it has been a lot happening on Base. Definitely, taking Onchain Media to new heights. We're actually coming up on the 1-year anniversary of Onchain Media. We have some special things planned for that. I'm not going to spill the beans or spill the peas on this episode, as I should say. But yeah, we have a lot of exciting things coming up. Onchain Summer is here, you guys. So yeah, we'll get more into that at a later point in the podcast. But just to start, I want to set the stage for this episode. So just, welcoming Del, thanking him for being here and framing the conversation. So Del, can you take a moment to just explain who you are, what your role is, and maybe at a high level what Peapods is?
Yeah, so I'm BD for Peapods. I've been working with them now for 9 months. My entire role is to educate people about the project, but also bring TVL to the project, and also teach protocols how to leverage the liquidity layer that is Peapods. I've been in the crypto space for 5 years, but I've been working in DeFi and crypto for 3 years. The first 2 years, I was just more so a researcher and an enthusiast.
Awesome. So I'm curious also, like, I want to dive into the project more, but on a personal level, what has inspired you and what motivates you to show up and build a project like Peapods?
Honestly, I came from an underprivileged background, and it kind of taught me the importance of money. And from a very early age, I had an interest in economics, learning about what is money and finance. And once I found out about like Bitcoin and decentralized money, it was like an epiphany to me. It felt like a brand new gold rush, like a way to get out. So I spent.
That's crazy. I actually have a book on my bookshelf called The Next Gold Rush about
Oh, oh, that's so funny.
One of my friends wrote it, Ethan Turr. That's pretty funny.
Yeah, I didn't even know that was a book. But yeah, I then started researching crypto as much as I could, multiple hours a day, and then I got very lucky to find a traditional finance job centered around crypto, and then slowly I made my way into DeFi.
Awesome. Well, yeah, I mean, I don't know if y'all are already watching or listening to this. Dell has a wealth of knowledge on different DeFi concepts. I mean, we should also one day just unpack the playbook of how you educated yourself, because whenever you speak about DeFi concepts and fundamentals, it's just so eloquent. You're able to really break it down in an understandable, digestible way. So curious to hear what that looked like for you, that self-education period.
Yeah, so a lot of it was YouTube at first, and then I realized like it got to a point where I was looking at all these guys who were just like promoting coins that they had bags in. So I realized I needed to go to like the actual source of truth, which was the blockchain. I started learning how to like look at smart contracts. I started learning how to actually use a contract to find a project's like Twitter and their white paper. And I just got really deep in the weeds in white papers and joining Discords and Telegrams. And that's where I was like, okay, this type of space is where you can actually do as much research as you would like to do. And it's very open source. It's very transparent. And I found that to be like a huge benefit over anything else that I could research for stocks, for example. So yeah, that's my easiest way of summarizing the playbook is reading white papers, joining Discords and Telegrams, and just putting the hours in.
Awesome. Well, yeah, I mean, that's honestly very inspiring for anyone watching or listening. If you're new to the space, it could be for anyone. Anyone can jump in, anyone can get involved and educate yourself. And I always recommend, maybe something I should say on the podcast is, nothing we say here is financial advice. I think both Del and I both encourage you to go out and do your own research on everything, go through the white papers. I think that's very important to do your due diligence and do your research. So yeah, just to move on and kind of dive into what Peapods is, could you explain what a high level what Peapods Finance does?
Yeah, we're the first protocol to tokenize volatility. Our entire goal is to take any underlying asset, we could think about Bitcoin, and harvest that Bitcoin volatility into yield for users who want to have that Bitcoin exposure long term. And we have built this idea out really far. It started back in December of 2023, a very simple protocol where you could deposit normal LP two-sided, and you would just earn a little more yield than you would normally earn if you provided liquidity on Uniswap, for example. And that's because of these specific functions we have in our contracts that charge extra taxes for arbitrage revenue. And that's something that Uniswap and other like LP pools miss, is there's this huge arbitrage economy, and the LP providers only make the spread of the trade. They don't actually make like an arbitrage fee on top.
Totally. Yeah. I've also heard of some folks doing extremely well with arbitrage trades. I think that is a big untapped opportunity where I have heard success stories of people doing really well. So I think that's really cool that you guys have seen an opportunity there and, have built a project around that. And volatility is one thing where when people are looking into, getting into crypto, they're like, oh, it's so volatile. I don't know. But you've actually created a project that helps incentivize people and capitalize on that volatility as like a positive. Like, that's really cool. Can you kind of explain how this idea came to life, like how this originated?
Yeah, so the original core founding team, it was 6 members, and I believe they were just like friends within the Web3 community. They had launched like other projects in the past, but nothing was really substantial or anything sticky. After a few years of them, launching projects together, Peapod Intern, he is the founder of the actual idea. He thought of volatility farming. He wanted to find a way to actually tokenize the most inexhaustible resource in crypto, volatility. And that's where he drafted up the right. And he drafted up the Peapods white paper. And then eventually he rallied the team. He got specific team members to actually code the protocol. We had initial BD and marketing as well. And then eventually I joined on later to help and cover like US hours, because the team is mostly based out of the US.
Very cool. And wow, for you to be building a DeFi project over the past couple of years in the US, I'm sure there's been, that could be a whole podcast in itself, like all the roadblocks and, things building in the United States. Oh my God, it was tough couple of years there for a while.
Yeah, you're right. And that's exactly why I haven't like doxed my face, just because of you never know what could come back to you later down the road if anyone like pulls up something like, hey, we saw you were doing this and this wasn't legal back then.
Yeah, true. Well, I actually, there's a space happening right after this with Stand with Crypto, and they're passing legislation right now. They just passed the Genius Act. So yeah, after this, if you want to hop on there's some folks who are experts on this, who are pushing for innovation and new legislation in our country. So I think it's happening now in real time where things are getting better for us.
Oh, I fully agree. And that's why we've seen the market react so positively. Once the new SEC chair said that DeFi will be exempt from that scrutiny, you saw Aave, Uniswap, even Peas, everything was up like 20 to 30% across the board.
I feel very optimistic about the markets in general because, I think in the U.S. there's a lot of innovation happening in progress. So okay, back to the origin story. We talked about volatility. I'm curious, what problems is Peapods Finance solving for the DeFi ecosystem as a whole?
Actually, that's a great question, because I feel like each stage and iteration of our protocol has solved a new use case for a cohort of users. And in V1, when we first started, I think that first cohort we were going after was the LP providers. We just simply wanted to help LPs earn more money from the volatility that they already experience. And then in V2, that's where we actually launched these volatility liquid staked derivatives. And basically, you could just take your Bitcoin, wrap it to P Bitcoin, and P Bitcoin you hold in your wallet, it earns Bitcoin. That was solving a use case for long-term holders who want exposure to their tokens, but want to earn some sort of yield. And that was really cool, because we saw a lot of different sort of Bitcoin strategies, ETH strategies. We even saw liquid staked on top of liquid staked inception strategies. And Peapods only was able to value add and compound whatever yields were going on in that underlying asset. We're able to compound yields on top of that as well. So it was really cool. And then V3, now we're enabling leveraged LPs. I think this opens the market more for. We have our stable lenders, like people who hold USDC and they're scared of volatility. They now can lend and earn yield from volatility without being exposed. And also projects who want to figure out ways to manage liquidity in a smarter way. And they can do so by coming to our site and actually taking loans against their own native token to start LPs. It's much easier for them to take a loan rather than raise funds or sell their own token. They just start up a loan and they can start earning leveraged yield on their own token.
That's awesome. So it sounds like it's opening up a lot more incentive alignment for traders and folks in the DeFi ecosystem. And that's very exciting. I feel like, especially just being able to hear from you today and learn more about what's possible. I think there also is a lack of education out there on like what people can actually use DeFi for and things like Peapods Finance. So I'm really happy today we're diving into all this. All right. So I am curious, Del, if you can kind of give a breakdown of how the product actually works functionally today, and then maybe we can screen share and show how that works.
All right, yeah, I'll screen share now. So this is our UI here. The website is beta.peapods.finance. We still have the beta label on while we tweak down the certain UI things. We want to make sure that the experience feels really smooth. And if we have that beta label, people understand that this is still a work in progress. But however, the protocol works 100% correctly at a contractual level, and
it
right
looks
now
awesome. By the way, I just want to commend the design UX team. Like, yeah, you guys, the UI just looks a lot better. Like I used it, last year, and I see a lot of improvements. So hats off to you guys.
Thank you very much. So yeah, at a contractual level, everything is working as intended. So as you can see, these green ones are called the pods. And this is a volatility strategy for the specific asset that you see for the pod. So for example, Tiber has been like up only for like the past like month. It's pretty cool. And we can go into this pod and view that performance. And here you can see that price action. The token's just been steadily going up, but it's had really nice volatility. And from that, farmers are earning 107% APY.
That doesn't even sound real.
Right. And this is paid in a mix of Tiber, P-Tiber, and USDC. So It's pretty interesting. You're in a basket of yield here. It's not just one thing.
Missing out on leaving money on the table, not messing around with DeFi and Peapods Finance. It's kind of crazy.
For sure. And anytime a leverage farmer decides they want to actually like enter the strategy, they click farm volatility, and then here they can actually connect their wallet. And here's the leverage slider for actually initiating your leveraged LP. So if I have like a 10,000 Tiber, $1,000 worth of it, I can go 2x leverage, and then it'll show me my order out. It'll take my Tiber, wrap it to P-Tiber, then it'll take my P-Tiber and pair that with USDC that I borrow. And then now I create an LP between P-Tiber and USDC, which I borrowed. So that 2x value is $2,500 of the LP, and then it'll tell you what your net APY is and all the borrow costs associated. But yeah, anyone who decides like, hey, I just want to add like normal LP, they can just scroll down to 1x, and then you'll see the site says, okay, you need to deposit your pairing asset, which is USDC. So 10,000 P-Tiber pairs 50-50 with 1,200 USDC. And this has no liquidation risk or anything. And then if you go like 2.33x, this is called over leverage, and this is really cool. Liquidation risk is obviously higher, but what happens here is you deposit your like 1,300 of collateral, and the contract will wrap it to P-Tiber, and it'll actually over borrow around $1,700. You only deposited $1,300. That excess $400 is sent to your wallet as a loan, and these funds do not come out of the chart of your token. So it's a cool way for traders or investors to access liquidity against their like meme coins without having to hurt the chart. They can just take a loan from Peapods. And this is a loan that's self-repaying, because most of your loan is actually held in LP up here. And that loan is yield-bearing and paying down the loan as it goes. So your liquidation decreases, and then eventually you may earn enough yield where you actually never need to pay back the $400 you took excess.
Wow, that's awesome. Can you explain? There was one term you used, liquidation risk. Can you explain what that is?
Yeah, so for any lending market, if you put up collateral and then you take a debt position, there's a certain point, if your collateral drops in value, the market will take your collateral to settle the debt before the collateral drops lower than the debt. If that ever happens, that's called bad debt, and that's not good. So we prevent bad debt by having liquidations. And at 2.33x leverage, the liquidation risk is about a minus 38 to minus 40% drawdown. But you can also then take this token like USDC, repurchase Tiber, and then loop and redeposit and bring down your liquidation risk a little bit.
Wow.
If you loop at max leverage and you loop, that liquidation risk is around 45%. And then if you're at 2x, the liquidation risk is minus 60%.
Oh, wow.
And then at 1.5x, the liquidation risk is like minus 85%.
Oh, okay. Wow.
Yeah. So it's
That's
super safe
significant
leverage.
jump.
Yeah, because where else in DeFi can you borrow 1-to-1 against your assets and have a minus 60% threshold before your collateral is taken?
Yeah, I think that 2x is the sweet spot.
Yeah, it's really nice. I personally like 1.8x.
1.8. Okay. I didn't know
just
you
to
could
add
go
a
in
little
between
bit.
like that.
Yeah, you can. It's like you can make it even just like as tiny as you want. There's I think we go 3 decimal places right here, like you
Wow.
see 0.91.
That's cool.
But yeah, I just like to pay in a little bit of the deposit asset, so I have a lot of space, and it's more likely I'm going to earn more yield. There's a lot of nuances that we could get into, like in some P's specific content. But yeah, that's the summary of it. It's really easy to start a position. You just take your Tiber, connect your wallet, select your leverage rate, and click deposit. And I'm going to jump back over here real quick.
Yeah.
Then we have the other side of the token, which is lending. So if I take a loan, that means someone can lend to me. Right now we're paying 24% to lend USDC specifically to this pool. And once you click it, it'll say, hey, we have this MetaVault. It's a social fund that's allocating to a bunch of pods. Or you can lend directly. You see, obviously, the social fund's a little less. There's less risk because you're diversified, but there's less yield. If you go directly to the isolated pool, make sure you know the asset's a legit asset. Check the Oracle. But you can then supply, and it's pretty easy. You just put up your USDC, and then you get this receipt token in your wallet. And this receipt token's auto-compounding, so that's why when you have 100 of this, you get a little less. So not to worry, you're not losing $2. If you immediately decide to unwrap, you're just going to get back the 100, because this is gaining value in USDC.
Very cool. Awesome. Well, I mean, we can keep screen sharing here, but I do have a question. So what makes the Peapods model more resilient or more effective than, traditional or other DeFi frameworks?
Yeah, I think the safe leverage, and that's like a term we call it, safe leverage. I think that's like the biggest thing that separates us from other lending markets. Because even like if you think of Aave, they're a blue chip lending protocol. They've been around for a long time. They have really deep liquidity. But if you go and deposit Bitcoin, the most you can borrow against is like 65 to 70%. And then if Bitcoin drops like 15%, you get liquidated. And that's honestly like not the best case scenario for people who want to leverage. And it's also risky for Aave. Like they have to liquidate you because the debt that they give you leaves their protocol. With us, when you actually take a loan, it's redeposited back into LP. So that's why we have safe leverage, because the escrow contract's holding your debt and your collateral together. So
Awesome.
you can't just like rug the contract that way.
Okay, so there's these safety rails in place to make sure there's no like room for bad actors to kind of try to rug. And I am curious, because I see some familiar projects here. It looks like we're on the base chain here, and with these projects, I'm curious what kind of outcomes or success stories that you've seen or heard of, like with individuals or maybe projects that have gotten on Ps.
Actually, yeah, I want to talk about P-Rax. So this is Rax. They're a RWA project. They're trying to tokenize stocks and commodities. And they started a pool with us at $125,000 worth of Rax that they deposited and took a 2x leverage loan. and borrowed 125,000 of USDC. And something to note, this was them starting up the market from zero, and they were able to start a loan for $125,000 without any lenders being present. That's unique to Peapods and not anywhere else. Anyone can bring any size collateral and take a loan of any size. So what I'll get into here is you see there's like a 0% APY, and this is why I think this is an interesting one to talk about. Right here it says like a negative 0.4%. I think this is just rounding. However, they are still earning yield. Like we could see total pod yield. They've earned like $2,300 on the position. And what's really cool about it is their liquidation point was around like 4 cents when the position started. Their token was at 8 cents when they had made the deposit. And then their liquidation threshold was 4 cents. The token had immediately dropped after the pod was started down to about like 4.5 cents. It was like really close to liquidation.
Wow.
Thankfully, there was a pump afterwards, and the token pumped back up to like 9 or 8 cents, and the protocol worked as intended and was farming the volatility of that pump. And in doing so, it actually was able to lower the liquidation point continuously. Now the token's back at 5 cents where it was when it was close to liquidation, but the liquidation point is now 2.8 cents when previously it was 4 cents. It got reduced by like 30%.
Wow. So that volatility actually helped overall for people who are farming and trading on this.
Yeah, exactly. And this is actually protocol owned liquidity by Rax. Like we partnered up with Rax, and this is their own treasury funds. So yeah, they started that loan, and Rax is technically down like 25% from when they started the loan, but the liquidation point is healthier. Every other lending market, if your token's down 25% from entry, your liquidation points only has gotten higher because interest is building up, and you're not earning yield on that collateral. Like with us, you're earning yield in LP. We send that yield back to repay the loans automatically and pay out your yield too.
Wow, this is so cool. So it sounds like it's good for the people trading on the platform. It's also good for the projects that are using this as well and listing. And I am curious if you can kind of touch on like kind of the culture around different projects here. I saw Thank You Base got on there. I saw Barrio. Not sure like, yeah, what the culture has been like for Peapods, or if you want to touch on that. Like what kind of projects or people do you see using Peapods? Like who is Peapods for?
I actually think the most projects I've seen come to us organically, like without us outreaching, has been like DeFi smart protocols. So like obviously shout out to Rax, shout out to EFI. They were one of our like earliest and largest partners. They seeded a pod with like $2 million, and it was one of our best performing pods. And also we've partnered with like Dinero. They have like a liquid staked ETH token, and they have a pod as well. But those protocols are the ones that understand us the easiest, and once they like do the research and come to find us, they want to use our protocol. They want to partner up really quickly because it is DeFi smart technology here. And the second most we see is obviously like meme coins. So like Thank You Base God, Barrio. I mean, has technology behind it, but it kind of started off as like a cult community at first. But a lot of these like grassroots communities also come to us because they don't have like a staking option yet because the project's immature. But they can come to Peapods and start up staking, start up loans, start up yield and credit. Like it's so awesome. It's a liquidity kit for any project that has launched or has just launched or been around.
That is awesome. All right, so looking ahead at the future of Peapods, Del, can you tell us what's next for the protocol?
Yeah, so definitely what's next is finishing up beta and making sure we can come out of beta successfully with a polished product. And then after, pretty soon, we'll have VLPs, and that'll be our Voked Locked Peas token. It'll be our new governance structure where any Peas holder will be able to stake and hold VLPs. And what's really cool is VLPs will also be a pod. So we're kind of taking like the X3-3.
So is this the alpha?
No, this is actually, this is known. So yeah, you'll be able to join governance by entering a pod, and the pod is earning you yield. So not only will VLPs earn protocol revenue, but VLPs will continue to earn volatility yield from P's volatility. So it's like the best of both worlds all in one pod. And you'll be able to vote on protocol decisions, and we'll also have a voting area here where users can decide
so cool.
which pods receive liquidity from our MetaVault. So yeah, if I like Barrio, I can vote next week that Barrio should receive a higher allocation than Pepe.
Shout out to Barrio. Love the Barrio community. They're awesome.
Yeah, shout out to them. But yeah, that'll be like the next really big thing in the pipeline is VLPs. And we're also, and I would say in the roadmap, we're also looking for routing integrations. That's coming pretty soon, because all of our trades, like all these pods and liquidity pools, are routed by independent operators. It's not even done by our team. There's just MEV bots and guys in DeFi who know we exist, and they know they can make a lot of money. So independently, they're running their own machines to farm these pools. But once we have routing, that's where things get really exciting. Because first, we'll have more seamless like interoperability between our pools. So if you have like P Tiber, you can immediately enter P Anon through a direct swap. That'll be something that's possible.
Nice.
And another thing that'll be possible is we're going to abstract our Peapods pools to the point where someone buying a token through like an aggregator like Kyber Swap or 1inch, they could be routing through a Peapod pool and get better pricing without even knowing that they're doing so, because we are plugged into these aggregators. Once that happens, we know the volumes are going to be insane and the yield is going to 10x.
All right. Well, I'm glad we're having this conversation now. This is like very exciting. It's like, wow, if you're, struggling on your gains or whatever, I mean, this is a very good project to help you to farm the volatility and earn from it, like benefit from the crazy crypto volatility. This is awesome.
Yeah. And there's one
sounds
last
very modular too, like you're
it
connecting
is.
with other projects now.
Yeah, we want to be a liquidity layer where people can come to our site, but we can also just abstract everything and just call a contract or something. But yeah, there's one last thing on the roadmap, and this is like a newer item, which I'm personally really excited about. We are talking about starting like a Peapods fund by using like protocol revenue to launch pods for communities. So we're going to have like a campaign once we're out of beta. We want to see which protocols, which teams want a pod with us, and they can engage with us on X. They can vote on polls, and we're going to have like a leaderboard and see like which top project for the week is going to get a free pod sponsored by the protocol. And
wait,
whatever
so has
yield,
this been announced yet?
No.
This has, okay, so you guys watching and listening, this is some brand new alpha coming to you hot off the press, okay? That's very exciting now that, it's going to open more up to the community. That just sounds really awesome.
Yeah, we want to open it up to like the blockchain communities like Olive Base, Olive Arbitrum, Sonic, and Bera. Because any project on those chains can launch a pool with us, but we know sometimes people feel like it's a little scary to get their feet wet. They don't know the protocol. They're not used to volatility farming. So that's why we want to do sponsored pods where we'll launch it for them, and hopefully their communities will rally around it and join up. And all the yield that those pods earn and the fund earns will get sent back to VLPs at the end of the day.
That is very cool. Well, I am excited and very honored that you're dropping this announcement here, on the Onchain Media podcast. So very grateful, Del, to have had you on today. And, we talked about what Peapods Finance is, about you, how functionally you can use the protocol. Now, I'm curious for closing reflections here. What are your closing thoughts, and where can people go to learn more, try this out, or just get involved?
Yeah, so definitely go to beta.peapods.finance to try out the protocol. But the easiest way to get involved with the community and get educated is to join our Telegram. You can find our Telegram link by finding our X page. Our X page is Peapods Finance. Really easy. You'll recognize that big green P logo, and we'll have our Telegram in our bio. So yeah, join the community because we have a really smart community of people that are super friendly. I've been in all sorts of communities where you have like degens, people who are like really cool, some people who are toxic. But when it comes to the peace community, everyone is just so freaking friendly. It's mind-boggling to me, and I
These are
love those guys
facts.
very much.
I mean, if your vibes are a testament of the vibes of your community, then I'm just I'm loving it. By the way, wow, you guys are doing a lot with your design and your marketing. I'm like loving this. I've watched this brand evolve, you know, since I first learned about you guys, and I just see a lot more just nuanced little details. Like I can tell there's a really good design team or person, I don't know, behind all this. Like
Yeah, we have some really
really
cool
good.
team members. This is honestly shout out to Mazda, Skirring, and John. There's some guys in our Telegram. Two of them just actually got hired by Peapods recently, so congratulations to them. They're helping us with marketing, and they're helping like actually make these posts and design. We have a really cool design team. I love the, just like the animations they make too. Like
this
that
is
looks so
cool.
clean.
Like wow, it really does. Yeah, and I really appreciate, you know, just high quality marketing efforts, design, and you could tell there's people behind this who really care, who are taking the time to be attentive to the small details.
Heck yeah.
But anyway, sorry, I can rant about like marketing and branding stuff all day. But yeah, I love what you guys are doing. I'm very honored that, you know, we've done several shows now together, Del. We've had like, you know, our Twitter spaces we've done, you know, the recent live stream on BMX. But I always love cooking up with you guys. Like I'm down to do this kind of stuff anytime with you guys. So yeah, just happy to be connected. Honored to have you on. And yeah, I mean, do you have any closing words of wisdom or anything you want to share before we drop?
Yeah, so we're gonna get another podcast up where we'll have intern and Meta talking, and if you guys want more of like a technical deep dive, they'll be the ones to provide that on the next podcast. And yeah, thank you very much, Rachel, for the opportunity. Like you're amazing. This has been super fun.
Absolutely. All right, man. Well, thank you so much. Have a great rest of your day. And for everyone watching or listening, thank you for tuning in and supporting this channel. I'm grateful for all of the supporters of Onchain Media and our community. And we will see you on the next one. Thank you.
Take care.